Applied Digital Corp, trading under the ticker APLD, is currently priced at $19.55, reflecting an intraday gain of 0.488%. That subtle green on the screen, however, masks a much more complex and volatile story, one that the casual observer might easily miss. The expectation in the market is that Applied Digital is just another company riding the wave of the artificial intelligence boom, a simple pick-and-shovel play on the insatiable demand for data centers. But the reality is far more nuanced, fraught with both immense potential and significant risks that aren't immediately apparent from the surface-level narrative. Many investors, perhaps drawn in by the allure of AI, are looking at this as a straightforward growth story. They see the massive contracts and the expansion plans and assume a clear path to profitability. The truth, however, involves a delicate balancing act, a strategic pivot from a volatile industry, and a level of customer concentration that should give any serious investor pause. The common belief is that with the explosion of AI, companies that provide the essential infrastructure, the digital real estate, are guaranteed winners. And to an extent, that's true. Applied Digital has masterfully positioned itself to capitalize on this trend. But what many fail to grasp is the sheer operational complexity and the capital-intensive nature of this business. The recent news has been overwhelmingly positive, with the company finalizing an additional 150 MW with CoreWeave at its North Dakota campus and breaking ground on the massive $3 billion Polaris Forge 2 campus. These are monumental undertakings that promise a substantial and predictable revenue stream, with anticipated contracted lease revenues reaching a staggering $11 billion. This is the kind of news that fuels a bullish narrative, and it's certainly a core part of the company's long-term value proposition. You can see why platforms like SoFi Invest and Robinhood are seeing increased interest in APLD stock from retail investors looking for exposure to the AI infrastructure space. However, a deeper look reveals a more intricate picture. This isn't just a simple story of building data centers and leasing them out. Applied Digital is in the midst of a significant strategic pivot, moving away from its origins in cryptocurrency mining hosting towards the more stable and potentially more lucrative world of high-performance computing and AI. This transition is not without its challenges. The company still has significant exposure to the crypto market through its existing data center hosting business, with a major customer in Marathon Digital. This concentration risk is a critical factor that is often overlooked in the excitement surrounding the AI pivot. The fortunes of the crypto market are notoriously volatile, and any downturn could have a meaningful impact on a key segment of Applied Digital's current revenue. This is the kind of detail that sophisticated investors, using platforms like Interactive Brokers with their advanced analytical tools, would be closely examining. The daily stock movement reflects this underlying tension. The intraday volatility, with a high of $19.57 and a low of $19.01 on a volume of over 2.5 million shares, is indicative of a market that is still trying to fully price in both the long-term potential and the near-term risks. Institutional ownership, which stands at a substantial 58%, provides a degree of stability, with major players like Hood River Capital Management and BlackRock holding significant stakes. This suggests that the smart money sees the long-term value in Applied Digital strategy. However, the recent significant insider selling is a data point that cannot be ignored. While there could be many reasons for these sales, it's a factor that adds a layer of caution to the otherwise bullish outlook. Investors managing their own portfolios through services like Schwab Intelligent Portfolios or Fidelity Wealth Management would be wise to consider both sides of this coin. When we look at the financials, the expectation of rapid growth is met with the reality of a company that is still in its early stages of this major transition. The fiscal fourth quarter and full year 2025 results, reported at the end of July, showed a company in flux. While revenues are growing, the company is not profitable, and earnings per share are still in negative territory. Analysts' consensus estimates for fiscal 2026 project a continued loss, which has even widened in recent revisions. This is a crucial point that often gets lost in the excitement over top-line growth. The path to profitability is not yet clear, and this is a significant risk that investors need to be aware of. The valuation is also a point of contention. The stock is trading at a significant premium to its peers based on forward price-to-sales multiples, suggesting that the market is pricing in a great deal of future growth. This is where the tension between expectation and reality most acute. Is the current valuation justified by the company's long-term prospects, or is it a sign of an overextended market sentiment? What does Applied Digital actually do? At its core, the company designs, develops, and operates next-generation data centers. These aren't your average server farms. They are highly specialized facilities designed to support the immense computational demands of high-performance computing and artificial intelligence applications. The company's business is divided into a few key segments: data center hosting, primarily for cryptocurrency mining clients, and the rapidly growing HPC hosting business, which is focused on the AI market. The company's strategy involves leveraging its expertise in building and operating these complex facilities to capture a significant share of the burgeoning AI infrastructure market. Their partnership with Macquarie Asset Management, a major global infrastructure investor, is a testament to the credibility of their strategy and provides them with the financial firepower to execute on their ambitious expansion plans. This is the kind of strategic move that can provide a significant competitive advantage. Looking ahead, the future for Applied Digital is a story of immense opportunity and equally significant challenges. The primary catalyst for growth is, without a doubt, the continued expansion of the AI market. The demand for specialized data centers is expected to grow exponentially, and Applied Digital is well positioned to be a key beneficiary of this trend. The successful execution of their Polaris 1 and 2 projects will be a critical determinant of their future success. These projects are massive in scale and will require flawless execution to come online on schedule and within budget. Any delays or cost overruns could have a significant impact on the company's financial performance and stock price. Comment below with your thoughts on the biggest challenge facing the data center industry right now. Is it a matter of power consumption, supply chain constraints, or something else entirely? The risks are not to be underestimated. The company's reliance on a small number of large customers is a significant concentration risk. The potential for a downturn in the crypto market could impact their legacy business, and the competitive landscape in the AI data center space is becoming increasingly crowded. Major players like Digital Realty and Equinix, as well as a host of smaller, more specialized competitors, are all vying for a piece of this lucrative market. Applied Digital will need to continue to innovate and execute flawlessly to maintain its competitive edge. The regulatory environment is another wild card. As the AI industry comes under greater scrutiny, there is always the risk of new regulations that could impact the data center industry. In conclusion, the story of Applied Digital is a compelling one, but it is far from the simple, straightforward growth narrative that many investors might assume. The expectation is that this is a pure play on the AI boom, a can't-miss opportunity to invest in the digital infrastructure of the future. The reality is a company in the midst of a complex strategic pivot with significant execution risks and a valuation that is already pricing in a great deal of future success. The potential for substantial returns is certainly there, but so is the potential for significant downside if the company fails to deliver on its ambitious plans. This is a stock that requires a deep understanding of the underlying business, the competitive landscape, and the financial realities of a company that is still in the early stages of its transformation. The long-term success of Applied Digital will depend on its ability to navigate these challenges and to prove to the market that the reality of its performance can indeed exceed the already lofty expectations. This is a story that is still being written, and for investors in individual brokerage accounts, whether with Fidelity, Robinhood, or SoFi, will be one that requires diligence and a clear-eyed assessment of the risks and rewards.